Breaking news out about Morgan Stanley cutting 1,600 jobs in the first quarter of 2012. Joining me now on the phone to talk more about these planned layoffs is Ariel Investments Vice Chairman Charlie Bobrinskoy. Also with us is David Kelly and, of course, Dominic. Charlie, let me start with you first. What do you make of these layoffs?
So Morgan Stanley and a number of investment banks are going to be getting smaller. We know that. We've known it. And that's the right strategy. They're going to be returning capital to shareholders. Yesterday, they had their settlement with MBIA, which was going to allow them to return capital to shareholders because of all the new regulations, Dodd-Frank and other. These are going to be smaller businesses, but they're going to be able to return capital, and that's a good thing.
That's a good thing, but it's going to weaken their talent base, though, Charlie.
Well, in a move like this, they're obviously not going to be letting go their top producers, and they're going to be taking people out of businesses that are smaller. So let's face it, fixed income is a business that's grown by leaps and bounds over the last decade, and it probably needs to be a smaller business at Morgan Stanley, Goldman Sachs, Citi, and JPMorgan.
David, what do you make of this?
Well, it is a tough environment for investment banking. I mean, frankly, people are not very excited about investing right now. There's an awful lot of money, $9.8 trillion by our count, sitting in cash accounts earning zero, and nobody's going to earn much of a commission on zero. So it is a tough environment, and so we're not surprised to see layoffs around the industry. That's just sort of year it is.
Well, I mean, this follows on a lot of other competitors. You know, Bank of America really cutting tens of thousands of jobs over the course of the next few months, years, to try to get back to a structural change to the overall banking environment. Citi also making that comment about how they have to match these expenses, compensation specifically, with the revenues that they're going to generate. So the question then becomes, this is the deleveraging process, David, right? Yeah. This is the deleveraging. How long will it take before these banks get to a more normalized operation when these job cuts don't have to happen, when things start to get maybe bottom out for them?
Well, we will always have cycles on Wall Street, but I think Wall Street is a lot leaner and meaner than it was a few years ago. And I think if we see a strengthening economy next year, I don't really see it getting that much worse. I think we will see a better year for the investment bank business next year, provided the economy begins to strengthen a bit.
And Charlie, just so you know, let me ask you this, though. I mean, you know, some would look at this and say, look, this is the reason why I'm staying away from U.S. financials. What's the other side of that, then?
That they're just unbelievably cheap. There's no sector right now that's more out of favor that people are trying to avoid because of the problems in Europe. But you've got some of these stocks trading at unprecedented lows. Morgan Stanley right now is trading at less than 50% of book, about 60% of tangible book. That's just way too cheap.
Right, these banks.
We're seeing this. I mean, if you look at the financial sector, if you look just at price to actual current earnings, the earnings we're actually seeing, I mean, these PE ratios are extremely low. You have to have a very negative view, both in the regulatory environment and in the potential risk from Europe, to actually price these stocks at these levels.
Right, but they're cheap as long as you think that we've bottomed out here in the economy, don't you think?
I think so, but we still have the potential for more bad news coming out of Washington, and we still have, you know, until Europe comes up with a plan that's actually going to work in the long run, that risk is still on the table, and that's a problem.
Okay. All right, Charlie, thank you for joining us. Charlie Bobrinskoy of Ariel Investments.